Friends, as we have already discussed about the fourth head of income, that is income from capital gain. Now, I told about the different types of capital gain and what are the exceptions to the term transfer and to the term capital assets. And already we have discussed about the cost inflation index. It is a great relief to the assessee while we calculate the income from capital gain. Now, we will move to the important chapter or important division, that is, what are all the exemptions. Exemptions from capital gains. First thing that I want to tell you very clearly, the exemption is applicable only for long-term capital gain. Therefore, first we have to identify whether it is long-term or short-term. If it is long-term, then we think about claiming exemptions. Under section 54, there are about lot of exemptions. 7 to 8 exemptions are available while calculating the income from capital gain. To start with, I will just tell you, there are exemptions under section 54, 54B, 54D, 54EC, 54EE, 54F, 54G, and so on. These are all the exemptions which are eligible when we calculate the gain. Now I will just tell you what are all the important exemptions. Normally, when we go to the problem, these three exemptions are very, very important. Section 54, Section 54EC, and Section 54F. These three sections are very important and it is commonly used, and it is applicable when we go to the problem. When we want to calculate the income from capital gain, we must be very clear about these three sections. I will let you explain what is section 54. Listen. Section 54 is very clear. The gain arising from transfer of residential house. The gain arising from transfer of residential house. When you have sold a residential house, then you can think it of claiming exemption under section 54. When we just try to understand what are all the provisions which are available under this section. First thing is, they say when the assessee purchase another house, that is residential house, 1 year before or 2 years after, he can claim exemption under this section. When the assessee purchase another residential house 1 year before the date of transfer or 2 years after the date of transfer, he is eligible to claim exemption. That's the first point. The second is to construct. Either he can purchase or he can construct another residential house. For construction, it is 3 years after the transfer is made. So you must be very clear. For purchase also 3 years, but the period is 1 year before or 2 years after, or he should construct within 3 years. Then he can claim exemption under section 54. Very simple. The sale is residential house, then you should purchase or construct within the time limit. Then you can go for claiming section 54 so that you can reduce your tax liability. The capital gain can be reduced. Yes, let us. Just I tell you an example. When the selling price is 20 lakhs and the cost after CII, that is indexed value, for example, it is 15 lakhs. The gain is 5 lakhs. This is called long-term capital gain. If you purchase or construct within the time limit as per this section, this 5 lakhs, if you are able to invest in another residential house, cost of new house, either purchased or constructed. I have purchased for same 5 lakhs. So then what is taxable? It is nil. If I am able to invest only 3 lakhs, then 2 lakhs will be taxable. Another time, if I invest 6 lakhs, the gain is only 5 lakhs, whereas I have invested more money, then you cannot put minus. The gain is exempted. The extra money, the excess money which you have invested, it will not give any benefit under this section. This is the first point that we should understand. If you want to save from the tax, then we have to utilize the gain for purchase or construction of a new residential house, then we are eligible to claim exemption under this section. This is one first point. Then before going to the exemption, we should have another point that is to be considered. That is called scheme of deposit. Scheme of deposit. What is this provision says? Scheme of deposit. As I already said, purchase, for purchase it is 1 year before, 2 year after. 2 year after. Then for construction, 3 years. 3 years. Now, what the scheme of deposit says? There is a new scheme that we have to very seriously follow this scheme of deposit when we want to claim exemption. The scheme of deposit very clearly says that for the previous year 2020-21, the previous year begins from April 2020 and ends on 31st March 2021. Then after the previous year is over, what is the due date? Due date for filing the voluntary return. Due date for filing the voluntary return is for every assessment year, it should be 31st July. For the previous year, it ends on 31st March. The income tax department gives you 4 months time that within this 31st July, we are supposed to submit our voluntary return through online to the income tax department. So this is the due date. Now, after determining this due date, when we want to claim exemption under section 54, now you should be very clear. There is 1 year time is before, there is no question arises. 2 years after or within 3 years, I am allowed to purchase within 2 years, to construct in another 3 years. Whereas the Act says, before the due date of filing the return, if I am able to purchase another house, well and otherwise, I should deposit in any nationalized bank under deposit scheme before this due date. If I have not deposited, then the chance of claiming exemption is clean, over. You cannot claim exemption. Therefore, the rule says 2 years time is there. For example, I sold the house on 1/6/2020. This is coming under the previous year 2020-21. 6/1/6. For example, June, July, August, September, October, November, December. There are another 7 months. So 7 plus 6, 13 months period is with you. Within this period, either you can purchase or construct. If not, you have to deposit the money in any nationalized bank before 31/7. Then you withdraw and you purchase. You withdraw the money, then you construct. So that is the rule which we are supposed to know. Sir, if I am not able to remember this rule, then the chance of claiming exemption is not available. You cannot claim exemption. If you have not deposited the money, either I should purchase or I should deposit. Either I should construct or I should deposit. If I have not deposited the money before the due date, then I am not eligible for claiming exemption under this section. This is the major point that we are supposed to remember. And finally, what is the reason why when the exemption claim will be withdrawn? There are two reasons where what are all the exemptions which we have claimed will be taken back. There are two reasons. First point is that newly purchased assets or constructed house should not be sold out in the next 3 years. The first point, it should not be sold out in the next 3 years. I purchased a house in order to claim the exemption under section 54. Then at no cost, I should not sold that house in the next 3 years. If I sell the house, what will happen? The gain now whatever I get plus the exemption claimed earlier will be taxed. For example, I said here, I have got 5 lakhs rupees as the capital gain. In order to safeguard that 5 lakh, I have invested in another house, 5 lakhs. After 2 years, I sold it for rupees 7 lakhs. What will happen? 2 lakhs rupees is the gain now. Plus, I have claimed 5 lakhs earlier exemption. So, 2 plus 5, 7 lakhs is taxed. This is one point. The second point is the deposited money. As said, under the scheme of deposit, before the filing of the normal return, that is voluntary return, the amount has to be deposited. After depositing, I am just keeping quiet. I have not utilized the money, either for purchase after 2 years. Take for example, this is the date on which I have transferred the assets, 1/6/2020. So, before 31/5/2022, I should utilize the money for purchase of another house, or before 31/5/2023, I should use the money to construct another residential house. If I was failed to either purchase or construct within the time limit, then after depositing, whatever the exemption I have claimed will be withdrawn. I am supposed to pay tax for this. So, these are all the points that we should remember. This is an important section. If we just go through these provisions, then it will be easier for you to go to the next sections. Understand? So, first, the sale should be of residential house, and the house should be purchased either 1 year before or 2 years after, or to construct within 3 years. This is the first point. The second part is scheme of deposit. When we come to the scheme of deposit, before filing the voluntary return, the amount should be deposited if you are not able to purchase or construct. Yes, you deposit the money and you claim the exemption. After claiming exemption, the newly purchased assets should not be sold in the next 3 years. And after depositing, when I have claimed exemption, the deposited money should be utilized for purchase or construction within the time. So with this, we complete section 54. Another 2 sections we will try to discuss in the next class. Thank you.